This video covers bank reconciliations. And when you're looking at a bank reconciliation, the purpose is to get your bank balance to equal your book balance. So there's always going to be a difference between what your books say and what the bank statement says you have on your account. There are several reasons for these differences, which we will discuss here. So the first thing you want to do is compare the bank balance to the book balance. And the objective is to get these to ultimately equal to one another. One reason why there would be a difference is because outstanding checks. These are checks that the company has written, so it's already been deducted from the book balance, but the bank has not received them yet. So they haven't been deducted from the bank balance. So you would make a deduction to the bank total. Another example for differences is deposits and transits. Deposits and transits are deposits that have been received and recorded in the book balance but have not yet been recorded by the bank. This would result in an increase to the bank balance. Another reason for differences would be electronic fund transfers. Electronic fund transfers can come in the form of bill payments. So the bank is making a payment on behalf of the company, but the company has not yet recorded it in their books. So that would be a deduction. Electronic fund transfers can also come in the form of payments from customers. In that instance, the bank has already recorded the deposit, but the company has not yet recorded the deposit. So that would result in an increase to the book balance. A fourth difference would be non-sufficient funds. This is when the customer is paying an accounts receivable balance, but in fact the check that the customer has sent to the company bounces. So in that case, we had previously recorded it as an increase to our book, but the bank did not accept the check. So therefore we would need to deduct it from our book balance. A fifth reason for differences would be service charges. These are charges from the bank monthly for using the bank account. The bank has already deducted that from the bank balance. We would need to deduct that from the book balance. And the final one are errors. Errors can happen either by the bank or from the company's side, and that will dictate whether you will be increasing or decreasing the book or the bank balance. If we assume that the bank made an error and recorded a $118 deposit as $181, that would mean that the bank has over deposited into our account by $63. So that would be a $63 deduction from the bank balance. When you add this all up, you get $537 on the bank side and $537 on the book side. When these two equal, your bank reconciliation is complete. Now the last thing we need to do is go back to our book account for cash and make sure that the $675 properly reflects the actual amount of cash, $537. We accomplished that by recording a journal entry. The journal entry would debit an expense account for $150 for the EFT transfer. It would also credit sales for $75 for the EFT transfer that we received. There would also be a debit to accounts receivable for the non-sufficient funds, where we have to go back and reinstate the accounts receivable and go back after the customer that did not pay. There would be another expense for bank charges for $12, and then the resulting would be a credit to cash for $138. When you add that $138 here, we end up with our balance that actually reflects the amount of cash that we have. Remember, these journal entries are only for adjustments to the book balance. We do not record a journal entry for any adjustments that happen on the bank side.